topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, good morning. It's a great Holy Week, getting ready for Christmas. You know, I get to do certain things that are a lot of fun, and one of those is being Santa, you know, and doing this for some kids and a small play group and everything was a lot of fun. Reading a book and telling the stories of Christmas was really entertaining for myself and really enjoyable to be able to spread a little bit of joy and fun for kids, you know. So you get the opportunity to do that, but it also is a time to step back and remember, you know, what Christmas is really all about. It's not about the presents and the gifts. Yeah, that's wonderful and fun, but teaching the kids that there was a bigger gift given to us by God and given us our Lord and Savior, Jesus Christ, who was born, you know, Christmas morning is what we celebrate. And so this week, I heard something really interesting from our priest. You know, when people say, you know, happy holidays, it's really happy holy days. And, you know, Merry Christmas. That's what it's really all about. But, you know, we're at the end of the year. You know, maybe you're driving a truck. Maybe you're an owner or operator. Maybe you're a small business person. Maybe you're running business, you know, whatever it is, you're finding ways to do what? Save money, reduce taxes, make more money, keep more money in your pocket. All of those are goals of the business owners. The goals of the government is to do what? Collect taxes, you know, redistribute the wealth, as they may say. And what they consider to be wealthy and what you and I consider to be wealthy are really on two different levels. And those that are ultra rich have the people working for them that are finding ways for them to save money. Sometimes it's through investments that give them huge write-offs of depreciation and other expenses via maybe a K-1. Maybe it's investing in, you know, real estate and getting deductions for, again, depreciation and other items that, you know, they can take advantage of by investing in real estate. And you see, hey, there people come through and say, hey, there's ways of reducing your taxes down to nothing. You know, there are, but sometimes those ways aren't the ways that you or I need to go. You know, losing money on investment properties and losing money by getting a K-1 that shows losses, you know, sometimes isn't the right way to do it because you're losing money. Or you're getting a write-off because you put money in as an investment, but maybe you need more return on that investment than those losses that you could take. So, you know, what do you do? Well, if you're an owner operator in the trucking business, a small business person, tax planning. You know, it shouldn't be something that you put off until you're going to filing, because it doesn't always work. Instead, you should be taking a completely proactive approach to finding ways to save money year round. You should be always looking for ways to save money. So, as an owner or operator, you should have monthly financial statements, as all businesses as well. It should have an income statement, or what you would say is a profit and loss statement. And you should also get a balance sheet. Don't let somebody cut corners and give you basically a cash flow statement that doesn't really show you just what your business is doing, how much money are you making. It doesn't give you a balance sheet. And we've got some people that compete against Trucker Tax Tools that realistically all they're really doing is providing them a cash flow statement. They're not really providing them a full financial statement. So you kind of got to be aware of those things. They don't give them a balance sheet. At Trucker Tax Tools, we're giving you not just a balance sheet, profit and loss. We're giving you income statement comparisons from month to month. And then, the last 6-12 months of operating, you'll be able to see everything out there. And then cash flow statement. Those become important to you to determine your profitability. Did you buy new assets or equipment? Did you miss any expenses? See, these are all things you're going to be able to see out there. I had a conversation with somebody that's brand new to Trucker Tax Tools and was working with them and talking about their financial statement. But we were missing items. We were missing some subscriptions subscriptions he was using within the truck. We were missing telephone expense. We know he was using his cell phone for business purposes because A, he was talking to me on it. B, that was his mode of communication. And there were other items that we were looking and going, hey, you didn't have insurance listed. And it wasn't deducted on his settlement statement. Oh, I paid that out of my personal account. Okay, let's get this over to the business. Finding all those deductions, using the comparisons to give you an idea of whether something's missing or underreported, or making sure that you just have every item out there. Those things become really important. But waiting to the last minute to discover those things makes life a little bit harder. Now, we're coming up on year end. We hear CPAs and other financial advisors say, hey, buy new equipment. Well, personally, I hate the suggestion of just buying new equipment just to save money on taxes. So when you look at it from just purely saving money on taxes, yeah, it might be a good idea. Because if you invest in a $100,000 truck and you're able to take Section 179, say the full $100,000, you saved $100,000 in net income. Now, if you're reporting on Schedule C, and you happen to be in the 25% tax bracket, you saved roughly 40% of taxes, 15% Social Security and Medicare, 25% if you were in the 25% tax bracket and were far enough into the bracket to save that amount of money. So, that's $15,000 plus another $25,000. Yes, you save $40,000 in taxes. However, you're still out the other $60,000 on this equipment, or having a loan to pay all this equipment back. Now, if it's the right time to buy this equipment, you need this new equipment. Your other equipment keeps failing, and your downtime for repair costs and maintenance is much larger and costing you money. Then maybe this investment, when you buy the new tractor or new trailer, becomes important and becomes an important business decision for you. So those are the things that you've got to look at. Is it the right time? Is this going to improve my business? As any business owner would look at new equipment. So as an owner or operator or trucker, you're talking about, your tractor, your trailer, things that are going to cost a lot of money that you're going to buy. Now, if you're in business, maybe it's a new piece of equipment or machinery, new production equipment. You buy it, get it put into service before the end of the year, and you might be able to take the Section 179 deduction or bonus depreciation and save yourself quite a bit of money. But again, is this going to immediately help you in business? If there isn't a good business decision besides taxes, it's not always the smartest decision to make. You've got to make the right decision for yourself, for your business, and say, hey, not only does this make sense from a tax standpoint, but this makes sense completely from a business standpoint. So you've got to be able to look at everything you're doing, not just from the aspect of saving money on taxes, but making it make sense to improve, expand, or save costs for your business. Now, we're going to be talking about some other items here that save you money in your business as you're going throughout the year, things you might want to consider, not just for 2025, but now we're going into 2026 and how to save future taxes as well. We'll do that right after this first break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Again, happy holidays and Merry Christmas to everybody. I hope everybody's able to come together with family and enjoy family across the board. We were enjoying family yesterday. We had my sisters, my mom, all of our nieces, most of our nieces and nephews and their kids. So we probably had close to 30 people at our house yesterday. Spent most of the day smoking brisket and pork and chicken and ribs and sausage. So, we were having a good time smoking the food in the morning so that we could have a wonderful dinner last night with everybody. And having them out on the ranch, my grandkids, my sister's grandkids, we're having fun out there with the pigs and the cows and the chickens and donkeys and all that fun stuff. So, we were having a good time. So hopefully you get an opportunity to spend this time with family and enjoy the moments you do have for family, because as we all get older, those moments are fleeting and always seem to go fast. Hey, we're talking about how to save money on taxes. We're talking about tax planning. We're talking about what can you do as an owner operator, a small business person to save money on taxes. And one of them we talk about is paying your children. If you're a parent, you can employ your child to work for your business. Now that means they got to do some work. You can't just pay them to do nothing. You can't pay them to lick stamps anymore because, hey, all the stamps just glue on. They can put the stamps on envelopes if you're mailing out bills or invoices or something else, but they've got to do something in your business. And one of the reasons you pay your kids is because they're going to be in a lower tax bracket than you. Generally, I think it's up to close to $12,000 you can pay them a year. And it's, other than Social Security and Medicare, it's tax free going to them. So, it's nice because they can then pay for their own sports. They can pay for their own clothes. If you've got college age kids that take care of maybe some of your social media for you, you can pay them to do the work, and then they can pay for their college if you're helping them. Those are all ideas that you can use to put somebody in a lower tax bracket. So if you're making pretty good money and your federal income tax is in a 25% tax bracket, well, if you just lowered it down to Social Security and Medicare, then your kids are putting the money that you're paying them maybe into, you could put it into an IRA and let it grow. You can put it into 529s, you can put it into money market accounts, wherever you want to do it. And the kids can then use that money, if it's in a money market or in a checking account, and use that money to pay for their clothes again. It can pay for their sports or whatever else you're working to buy them. Maybe you're buying them a car, and they can pay for the car out of the money that you're giving them through them working for the business. Something else, charitable contributions over the years have not really been deductible because of the high standard deduction. And so if you're making charitable contributions through your business, whether on Schedule C or as an S Corp, they're going to pass through to you. Now, most of those charitable contributions over the years haven't been deductible. And so change the way you categorize them. Get some marketing out of it, advertising out of it. So if you're giving to a charitable organization and you're getting them to put your banner up or promote your business, it is now marketing, not a charitable contribution. And therefore marketing or advertising becomes 100% deductible. So that's turning your charitable contributions into a business expense versus a charitable contribution that may or may not be deductible. So those are the kind of things you need to be looking at. Now, retirement contributions is another way to save money and get money out of your business and plan for your future. When I first got into doing bookkeeping and taxes for truckers, it was because we were solving IRS problems. And in the next segment, we're going to talk about IRS problems and solving those. But it was talking to truckers, and we started solving their IRS problems, and they asked us to get into bookkeeping. We're already doing some bookkeeping for owner-operators across the country. And we decided to expand the service nationwide, thus truckertaxtools.com. So if you're looking for a great bookkeeping service, hey, now's the time to get in and contract with us to do your bookkeeping and taxes for you, for not just for 2025, but 2026 as well and going forward. We started having conversations, though, about retirement. Many of our drivers that drive and work with us said, hey, my retirement is right here in this truck. I'm going to stay in this truck and drive until I drop. That's not retirement, that's working. And then it becomes death. So that really puts two things certain in life, death and taxes. Well, then you're going to pay taxes while you're driving the truck, and you're just going to use that to be buried in. No, we want you to be able to retire as well. So you got to start thinking about retirement contributions. And we've all heard that when you contribute early and often to retirement, you can retire rich. So many truckers haven't even started contributing. So if you haven't even started, now's the time to start and then stay consistent. So even a small monthly amount is better than absolutely nothing. As a business owner, you can fund your own retirement plan. So while contributions to typical IRAs are limited, you can contribute significantly more to a retirement account by opening up a SEP, a simplified employee pension plan, IRA, or even maybe a solo 401k. There's not a company size requirement for either one, and contributions are tax deferred. So you'll not pay federal income tax until you make that withdrawal. So it's putting money in there, getting credit for it, and getting a deduction for it potentially, and saving yourself money. It's kind of like the IRS contributing money to retirement for you for your future. So those are things that you need to make sure that, hey, you're starting and you're doing so that you can plan for retirement. Now, one of the things that, hey, we always like to touch on, and it's one of the biggest deductions that you as an owner-operator, truck driver gets, not W-2, owner-operator, truck driver per diems. Per diem rules allow for significant non-taxable reimbursement for meals and incidental expenses. So when you as a driver are away from home overnight, not driving locally and returning home every night, but away from home, over the road, using a single rate, $80 a day for 2025. And then 80% of that is deductible, not 50% like other business travelers. You have this great deduction. So if you're on the road, 200, 300 days out of the year, you're going to be able to get this deduction. Now, the first day and last day, it's only 40, it's half. All the days in between is 80. So you got to keep good records of your per diems. So your eligibility, again, you must be away from your tax home overnight for work that requires sleep, rest, and operate over 50 miles from home. It's $80 for continental. Okay, so keep that in mind. Truckers, you can deduct 80% of the per diem rate. Documentation is essential because the IRS does require proof. Now, ELDs and your dispatch logs can help substantiate all that as well. If you are a company driver and you paid under an accountable plan, per diem is non-taxable. You're not going to be able to deduct it on your tax return, but it's not wages. It's not going to be on your W-2. It's going to lower your adjusted gross income on your W-2 and things like that. So keep those things in mind. It's a valuable deduction. Now, one other rule that you've got to have is you've got to have a tax home. I mean, you've got to have a home somewhere that you actually pay rent or mortgage or something to pay for the upkeep. Otherwise, you're in a tax turtle, and therefore you don't have a home and you don't get per diems. So those are a lot of fun things that we get to do when we're talking with people to help reduce your taxes. Hey, we're going to take another short break here. And when we come back, we're going to talk about IRS problems and solutions to those problems so that we can help you have a very, very Merry Christmas. We'll do that right after this break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back again. Happy holidays, Merry Christmas. Enjoy the holidays every moment that you can get. Hope every truck driver that's out there, we appreciate everything that you do nationwide. I hope you get time to be home with your family at some point here over these holy days as well. You know, we're talking about trucking and taxes, and now trucking, taxes, and IRS problems. Why do we have IRS problems? I'm going to give you the first one. Not making estimated tax payments. You know, even our people that work with us, the truckers that are out there, we give them estimated tax payments every year. And sometimes, you know, getting them to do it is next to impossible. Nobody likes to pay taxes. You know, I can promise you there isn't one person that likes to pay taxes. Now, I can tell you there's a lot of people that like to make sure that you pay your taxes, and not just people at the IRS, but sometimes the rich people, sometimes it's government, you know, congressmen, senators. They all want you to pay taxes and pay as much as you possibly can because they want to spend your money. We, as a taxpayer, don't like paying taxes. You don't like to see that you owe at the end of the year. And, you know, one of the things you can do so you don't owe at the end of the year is make those quarterly estimates. Oh, that's so much better. Merry Christmas. You get to pay more in estimated taxes this year. You know, hey, that's why we don't do estimated taxes in December. We do them in January. And then the other times of the year you're supposed to do them is April 15th, June 15th, October 15th or September 15th, and then January 15th. So, you know, you got to make your estimated payments every quarter during the year. Yeah, those don't sound like great quarterly times, but it is what it is. If you make those estimated tax payments, you might be closer to what you owe. You might get a refund. But if business is down, then you can go to actual and not based off of prior years. So there's a lot of things we can do out there. But what other things cause problems for truckers and even small business people with their taxes? And I'll tell you one of the big ones: inadequate record keeping, poor bookkeeping by people that just don't care, that have no knowledge of your business and what you do. You know, we've done returns and seen returns come in for truck drivers and owner operators out there, and they don't even take the per diems because they didn't have a clue. They did depreciation completely wrong because they had no clue how depreciation should be on a tractor or a trailer. They didn't explore the options that you may have. They didn't look at other deductions that are out there. So doing things like that can cause problems for you as an owner operator, and you end up paying more money in taxes or having more debt because you didn't make those tax payments because you couldn't afford them at that time. You know, if you are a business owner or owner operator and you have people working for you, a lot of times we see misclassification of workers. Did you hire somebody you think they're going to be a contract person, but yet you're providing their equipment, you're telling them when, where, and how to work? They're really W-2. You just misclassified your workers. So if you're not meeting the IRS criteria, it can become a audit trigger. And then once you get audited and your independent contractors are reclassified as employees, you could be subject to paying all those employer and employee taxes. Now, if they've reported them on their own Schedule C and paid their Social Security and Medicare, get them to sign off on it, we might be able to reduce some of those penalties and the taxes that you may have to pay. But you may still be responsible for the employer side. See, it becomes kind of a catch-22 out there. How do they discover this? Amazingly enough, it only takes one person to go and file for unemployment. And now your unemployment office is coming out and they've done an investigation, and they investigate and determine this guy's an employee, not a contractor. So you were subject to unemployment taxes that you didn't pay in, and now you owe. They communicate with who? The wonderful federal government, the IRS. And then they get into a payroll tax audit. Now you've got the whole ball of wax rolling down the hill and getting bigger and bigger and bigger and bigger. So misclassification of your employees, contractors, your workers become extremely important. You need to make sure you're checking and confirming that your independent contractors are truly independent out there. Something else that really happens a lot and causes a lot of tax issues is missing important deadlines. Being an owner or operator, small business owner, your demanding lifestyle can lead to missed tax deadlines. And I mean, that could be your 1040 not filed on time, April 15th, or the extension, out to October 15th. It could be your S Corp not filed timely in March, or your partnership return not filed timely, and you didn't get an extension for either one of those, or you didn't meet the extension time. So, which would be September 15th. And you miss that deadline too. Now you've got bigger problems. Now, if you're an owner-operator, you also have to file Form 2290, the heavy highway vehicle use tax. Miss the deadlines there again. Because of the demanding lifestyle of a business owner, owner-operator, and being on the road, or just running your business day to day, these things slip under the crack. You can't afford to have that happen. You've got to remember. The other thing we see causing problems is taking large deductions and discrepancies. So, large deductions, round numbers, things that just don't make sense for you in your business. Discrepancies, your income was reported at $250,000, but yet your 1099s were reported at $275,000. That discrepancy right there is also going to be a red flag for you in your business. So you want to make sure that you're collecting and notating all of your income. Now, how can those differences happen? So if people don't know trucking, maybe never seen a settlement statement before, and they're doing bookkeeping for you, and what they do is report what went into your bank, there could be a huge difference between what went through your bank account and what actually you earned. Because your settlement statement is going to show possibly deductions for things that you charged on your comm data card or fuel card. And so it's going to have deductions for fuel. Maybe you're releasing your truck through the carrier you're leased on from, and they didn't pick up the lease amount. They didn't pick up fuel. They didn't pick up insurance. Maybe the lease carrier that you're running through pays for repairs, but then charges you back or takes escrow. So they didn't account for all these things for your business, and now you have underreported income. Now you have to go back and amend your return or prove that, hey, these other deductions should be there. So making sure that somebody is doing the job that needs to be done to report your income correctly, so that you don't have those large discrepancies between what was reported as income to the IRS and you reported on your tax return. So what's the solution? How do we solve this problem? And how do we stop the IRS from taking everything you have? And we're going to take a short break. We're going to talk about solutions, and taxation solutions in solving this IRS problems you may have just had. And we'll do that right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. As I've told you every segment, happy holy days, Merry Christmas. If you've taken the time to listen to today's show, I thank you. I thank you for being here and listening, and hopefully gaining some knowledge to help you in your business, whether you're running a small business, whether you're running a large business, or whether you're running as an owner or operator out there. Thank you for taking the time to listen here during this holy week of Christmas. Solutions to your tax problems, not just for truckers or owner operators, but for any business owner, any individual out there that owes money to the IRS. First thing I suggest everybody does is get a complete tax analysis done. Find out why. Because your solution to your problem may not be what everybody thinks. You know, oh, we're just going to go OIC, we're just going to do this, we're going to do a payment plan. No, get a tax analysis done. Maybe it's fixing the problem, filing past due tax returns. And then maybe if you get them filed and it's all within the last 3 years, maybe you get that refund back. Outside of those last 3 years, there is no refund. So, get them filed. Maybe the IRS filed substitute for returns and you need to file the actual return, and it brings the money down or zeroes it out. Hey, there's other solutions out here. We've got to look at it. Maybe the statute of limitations is running out, and you can save yourself a lot of money just by deferring and letting the statutes run out. Maybe, it's all the past due returns that you haven't filed. Let's get them filed. Let's find out what you truly owe. Get the penalties, get everything going, everything against you that is there, and then set up a solution to the problem. You're not going to be able to get a solution until those returns are filed. So we want to get those filed as quick as possible. Then you have options. First thing I say, seek financial help from a professional to get you on good financial sound footing. So if you're an owner or operator, call Trucker Tax Tools or go to truckertaxtools.com and contract with us. Let us get the bookkeeping and taxes and everything caught up to date. And then we can get those returns filed, get all the stuff you need to get that down to the lowest amount allowed by law, and let us stop the IRS in their tracks from collections. The next thing you need to do, if we can't sit down and say, hey, look, statutes are running out, we now got to look for a complete good solution. What's that solution going to look like? Well, most people sell the pipe dream of offering compromise, settling for pennies on the dollar, whatever you want to call it. Not everybody qualifies. It's going to depend on equity in home, what assets you own, what income you have coming in, what's your net income if you're an owner or operator, if you're got W-2 income, if your wife's got income. So they're going to take all this into account for you and your family. But we got to be proactive in getting this in place. So it may be setting up a payment plan for the back taxes that you owe to the IRS. It may be doing a partial pay installment agreement to get through when the statute of limitations is going to run out, or could be non-collectible status because you have just no income coming in and you can't afford to pay them anything. And offering compromise might look good at that point. But maybe you can't afford to do an offering compromise, then maybe non-collectible status is the right way for you to go to save you money on your tax debt that's out there. Maybe we can, set up a partial pay installment agreement over a short term that pays less than what you owe. And that may be the better way of going versus an offering compromise, because maybe you do make a little bit more money than you can afford to pay them, because IRS has strict rules for that offering compromise, in that the income itself and the way it's spent isn't the way you spend it, it's the way they give you national standards that you can't exceed. And if you can't exceed those national standards, but yet your income or your expenditures that are going out are exceeding the national standards, they're going to make you come back down to their rules, not your rules. So if your mortgage payment happens to be, let's say, $2,500 a month, and in your area the national standard is $1,700 a month, you're overpaying by $800 a month, and therefore the IRS would say, no, you can pay that to us. Now the rules are a little bit more lenient under a partial pay installment agreement, because they can then look at it and say, hey, yes, your mortgage is higher than national standards, but you can only afford to pay this out of pocket. So hopefully that makes a little bit of sense. But I mean, if there's ways we can take care of this, like penalty reduction, so we can go in and ask the IRS to remove penalties from your account, we do that so that it can reduce the amount of taxes that are owed. So, a couple things we suggest: if you're having problems with the IRS or having problems with your tax return, get good bookkeeping. That's the starting point. File your taxes on time. Make your estimated tax payments. And if you are behind on your filing, catch up on all the filings that you've missed. So whether it's 1 year, 2 years, 3 years, 7 years, get it done as soon as possible. Because the IRS, if you owe, is already putting steep penalties on you. If they did a return and filed for you, they didn't file in your best interest. Did they take every tax deduction? No, they didn't take any. Maybe they gave you your wife and your kids and the standard deduction, but they're not figuring depreciation for you. They're not figuring your expenses for you. They're not figuring any of that stuff out. So make sure that you are filing and filing timely, and then you can set up an installment plan for that year or the year before. You can make sure that all your deductions are calculated precisely, because you don't want problems with the IRS. You don't want problems in the future that you didn't get every deduction that they had. It's the way it is. We suggest that you don't let IRS problems derail your work, your business. So if you have an IRS problem, you need somebody that has the roadmap to resolving it, the roadmap to the solution for IRS debt. We at taxationsolutions.net tax relief, taxationsolutions.net tax relief, you can get a solution to your problem. So if you owe the IRS, we want to get a solution in place. We want to remove penalties where we can. We want to stop the IRS from taking everything in your bank account with their bank levy or their wage garnishments. We need to stop them in their tracks today. So give them a call. Let us put a solution in place for you so that you don't have to worry about the IRS, especially during these days around Christmas, going into New Year. You need a solution, and that is taxationsolutions.net to put the solution in place. So give us a call. You can reach Taxation Solutions and Trucker Tax Tools, 877-996-2477. Again, 877-996-2477. Hey, again, I just want to say thank you for tuning in and listening today here on W4CY.com radio. And we're glad to have you. I hope you're having a very happy beginning to this wonderful week of some of the most holy days. So happy holy days. Merry Christmas to all. We don't take this lightly. We enjoy and embrace this season, this wonderful holiday season here, that we celebrate the birth of our Lord and Savior. And take a moment, say a few prayers for your family. If you're listening, say a few prayers for those truckers that still going to have to be on the road over Christmas and not be at home, or the families away, people away from their families. Say a prayer for our military, those people that are stationed overseas and away from their families, and people that have to be away, protecting us, our first responders, firefighters, police officers who are out there electing to serve you and I in our own communities. They need our prayers as well for them and their families. As always, what we tell you is enjoy this week. Every week is a gift from God. So God bless you. Have a wonderful, blessed, and glorious Merry Christmas. We will be back next week, Monday, 10 a.m. Eastern Time, right here on W4CY Radio. If you're connected with us on Facebook at Trucker Tax Tools or Taxation Solutions Tax Relief, that you can see these videos pop up. You can go back to all of our podcasts at taxtalk4u.com. Again, that's taxtalk4u.com. Or you can find them on all the major podcast sites like iHeart, Spotify, and you name it. It's there. We'll be back next week. Have a God-blessed and glorious week, and we'll see you next Monday, 10 a.m. Eastern Time on Tax Talk for you.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalk4u.com. See you next week at W4CY.com.